Look at that nifty go, almost 19,800 on the screen. So the move is finally happening after a couple of very sort of lackluster days on the index. But we're sticking to stocks, and Ceat is the next company on the radar. The performance has been actually quite smart. It's the fourth consecutive quarter of margin expansion for the company. The margin is up a whopping 700 basis points year on year. Let's straight away take it to Arnab Banerjee, MD and CEO of the company. Mr. Banerjee, absolutely, hands down, fantastic performance on the margins. But allow me to just understand what's happening with the top line, because there one can argue that the growth has been a little sluggish at around 4%. What's the visibility that you have on volumes and top line growth for the next 1 or 2 quarters?
Yeah, the top line growth has been sluggish primarily because of flat growth in OEM sales. About 27% of our turnover comes from the OEMs. And there we are seeing a portfolio makeover as far as we are concerned. For example, we have exited from a lot of low rim sizes tires in OEM. And we are entering higher rim sizes tire in OEM. And the timing is a bit lagged. So over Q2, Q3 and Q4, we'll regain the market share in OEM. And it's a deliberate move. And it was known that it's going to happen this way, and it's good for the organization. Otherwise, exports have been growing very handsomely in double digits. The replacement market has been growing in single digit. So this overall growth is going to come back for Ceat.
All right. Good morning, Mr. Banerjee, and congratulations. What a solid showing. I wanted 2 numbers from you. One is on the margins, which have been steadily improving. Now it's at around 13%. So is there scope for it to improve from year on? If you could give us a band out there. And the second part is on the debt number. That's down by around 7% on a sequential basis. What's the trajectory out here? More debt reduction in store?
Yeah, I'll answer the second question first. If the profitability remains stable and steady across the quarters, we will see an impact on debt in the positive direction gradually as we go along. Our margin is expected to be stable over the next few quarters because raw material situation is pretty much benign. It's going to move in a very narrow band. We are holding on to a realization. Our gross margins, which is at about 41% this quarter, has reached the pre-COVID levels. So it had contracted by as much as 8-10% during the last 2-3 years because of hyperinflation. So we would like to hold our margin in that, the gross margin. And if we continue to grow, then our operating margin will also be steady in a narrow band.
Sorry, so margins should be around this, Mr. Banerjee, good morning, around the 13% level?
We would like to keep the margin stable around Q4, Q1 levels, yes.
Okay, got that. And you said that revenue also, OEM segment will also pick up in terms of when you'll gain share there in the subsequent quarters of this financial year. So what does this mean for overall revenue growth for the full year, FY24?
Overall revenue growth, the growth will come primarily from international business, replacement business and OEM business in that order. So we expect to grow single digit to low double digit for the full year.
Okay, 9 to 11%, basically.
Could be anything in high single digit to low double digit, yeah.
Okay, all right, got that. Sorry, and you said that this flux that you talked about, portfolio makeover, I think is what you called it in the OEM segment. That's basically a customer or two related issue in Q1?
In the OEM segment,
yes.
The sales of lower rim size, the smaller vehicles, as you know, as a percentage of overall vehicle sales is coming down. And the growth is in the top end in the SUV segment that we all know. So Ceat's portfolio makeover is also going on. And we have exited a lot of small rim size vehicles and entering into the larger rim size vehicles, so which will go in trend with the market and maybe ahead of the market as we enter Q2, Q3 and Q4. And overall volumes will also come back to where it was.
Okay, so as this happens, what is going to be the targeted market share? I think in FY23, in two-wheelers, you were at 28%. So, since there is a portfolio overhaul that's in the making as well, how should we understand your market share targets going forward, later this year?
In two-wheelers, we would like to hold on to a number one status in replacement market and expand the market share from 28% to 30% and beyond. In four-wheeler, we would like to inch towards market leadership by 2026, and we would like our market share to close in on 18 to 20% in replacement market. And this would be mirrored in the OEM sales also, where gradually our four-wheeler market share should move up to somewhere between 15 to 17%, and two-wheeler market shares should stay above 30%, which is the current situation in OEM.
In electric vehicles, your market share is about, I think, 40%, sir. What's the aim here?
In electric vehicle, that is two-wheelers, where we are 40%. Yeah, and we would like to be dominant players in two-wheelers. We have started off fast and early, and we would like to maintain our advantage there. In four-wheelers as well, we are working on a number of projects with all the OEMs. We have got RFQs and nominations, and our product readiness is absolutely on spot. So we expect to have a dominant play in four-wheeler electric vehicle market as well. In truck bus radial as well, we have got an entry into one of the largest OEMs with our electric vehicle tire. It is buses primarily, not trucks. So across categories, electric vehicle will be a very big focus area for us, an area of growth.
That's very good to hear, sir. Thank you very much, Mr. Banerjee, for joining us, and we'll probe more the next time you're on the program. Thanks very much. So that's a good set of numbers, great margin expansion in the first quarter. We'll take a break here. My colleague Latha will take over, and she'll have Mr. R. Shankar Raman, Whole-Time Director and Chief Financial Officer at Larsen & Toubro, to discuss their first quarter earnings. Stay tuned.